Let's also bring on board Kapil Gupta, economist at Edelweiss Financial Services, who joins into the discussion. Great to have you with us on the show. And Kapil, to start off with, let's talk about the overall inflation headache which most of the emerging markets seem to be battling with, India being no exception. Do you think that we are likely to see a cool-off, particularly when it comes to the food prices, or given the overall monsoon impact, that's going to be a bit of a struggle?
Well, absolutely. I think inflation has been the intractable problem of this downturn, and we have seen bout of fiscal consolidation over the last 2 years. We have seen good amount of monetary policy tightening as well, growth slowdown, but core CPI or even headline CPI has been stuck in a range. So that has been a lingering problem of this downturn, and I think 2-3 things here which are important here is, one is the food dynamics itself, food inflation dynamics, and I think there the role of government policy also plays a significant role more than anything else. Particularly I'm referring to minimum support price and, more importantly, the procurement policy that is very less amenable to interest rate hikes. The second one is that there is a continuous increase in the administered fuel prices, diesel, petrol, and even electricity prices. So that dynamics is also playing out along with the food dynamics. And thirdly, I think of late, over the last 1.5 years, the exchange rate depreciation is the third dynamics which is playing out on the inflation front. Now, some of these dynamics will fade out, some will linger, and that will determine the inflation outlook apart from the weather conditions in the very near term.
You spoke about how food inflation is going to be determined by a lot by government policies on MSP, procurement, etc. But since this is not going to change overnight, any new government which comes, however determined it is to take a strong position, you cannot really expect the MSP policy to change overnight, procurement to change overnight, the APMC Act to change overnight. So would you say that in the short to medium term, high food prices are a given? And what does that really mean for CPI, given that food is such a large constituent in the CPI basket?
See, we have seen over the past, even in the bad weather conditions, there is mechanism with the government to keep food prices relatively contained. We have seen in 2002 drought. It was one of the worst drought over the last 10-15 years, but we have seen food inflation, particularly cereal inflation, being very well contained by offloading stocks at the right time. So there are levers even in the near term with the government to control food inflation in case there is a monsoon shock. But and by the way, this food inflation, persistence of this food inflation also tends to spill over to core CPI, which is very services led through wage pressures and so on and so forth. So I think the single biggest challenge for the new government would be controlling inflation, because I think that's the single biggest hurdle to cyclical uptake, cyclical rebound in the economy. Now, over the near term, if monsoons remain normal, then we are going to see disinflationary process starting May-June period in our view, both at the core end as well as the headline. Headline, obviously, the food prices will face a very high base effect, so that will be favorable for food inflation to come down. But on the core front as well, I think the INR impact, depreciation impact, which is playing out in core WPI and to some extent in core CPI as well, will start to erode starting May-June period. Obviously, this whole outlook can get spoiled if there is a big monsoon failure because of El Nino conditions. But as I said, there are countervailing mechanisms with the government to address that as well.
Yes, certainly as far as food stocks is concerned, government does have enough and more by way of food stocks, so they can do something about food inflation. But you also talked about exchange rate. Now that is a big question mark, because one really doesn't know, depending on what kind of political outcome we have post May 16th, you could either see a huge inflow or you could see a huge outflow. How does any government or how does any central bank tackle two extreme situations, both of which are equally possible?
I think the big thing which we have achieved over the last let's say 8-9 months is the controlling the current account deficit, or the balance of the payment situation more generally. So I think that is the single biggest support to the exchange rate, so to speak, and we have built reserves as well. So there is fundamental mechanism in place which can help us sort of reduce the volatility around the election outcome, whether it's positive or negative or whichever the markets look at it. So there is reserves built up that will help control extra volatility in the exchange rate.
How do you see export performance in this present fiscal? Because we've already seen exports dip a little bit in terms of growth. There has been a decline for 2 consecutive months. So if the rupee appreciates, that is going to hurt exports even more. So what does that mean for our CAD?
Export situation, I think a demand factor is also at play at this stage. I think the March quarter has seen a weak exports. Typically it's a strong quarter for exports, but I think the winter conditions in the Western world, particularly in the US, have influenced that the export performance. Now the good news is that obviously the data in the US is rebounding from the weakness over the last 2-3 months. So if that sustains, then I think there is some hope that exports uptrend which we saw starting late last year that may resume. And in fact, if you look at all the demand drivers in the economy, I think exports is one where we have some hope that that will provide support to the manufacturing industry.
And how do you explain the recent softening in the bond yields at a time when you have so much of excess supply, as it were, and the new government, as when it comes, clearly borrowing is only going to go up rather than down. So you should expect bond yields to go up, but there seems to have been a temporary correction. What explains that correction?
I think 9% plus levels were anyway for the yields were a little too high, so it attracted investments in the bond yields. But I think more generally on the liquidity situation, I think we are moving into a more comfortable situation. Whether you look at the credit deposit ratio, deposits have been outpacing credit growth. That is a fundamental driver of the liquidity, and that is positive. The government cash balances have also come off, and that is again supportive of liquidity. And there is a revival in the capital flows on the BOP front. I think some of these factors will keep overall liquidity situation much more comfortable than we have seen in the past quarter or two, and that will be supportive of bond yields.
Kapil, now that a lot of commentary has been issued by various agencies regarding the monsoon, the possible start of the monsoon at least, what do you make of the possibility, and is El Nino really as big a monster all the time for the economy as it is made out to be in your view?
Well, we have looked at the history of the El Nino over the last 50-60 years. Since 1960 we looked at the data, and what it shows is that there have been, I think, 20 odd years in which there have been El Nino issues, and out of those 11 years were below or deficient rainfall or a drought like of situation. So it's a mixed history so far as El Nino impact is concerned. A lot depends on when El Nino impacts the rainfall activities, the late monsoon season or sowing season, or what is the geographical distribution of the rainfall during the El Nino season. For example, if the weakness is in the northwestern part of India, which is well irrigated, then typically the decline in the output will not be that much. So we really obviously we need to hear from IMD. They'll be coming out with the forecast soon as to what kind of situation is developing so far as El Nino is concerned.
Kapil, do you think that even a favorable outcome in the elections will not lead to some of the key bottlenecks like infrastructure bottlenecks, investment cycle picking up, not seeing a quick fix solution?
I think one hope we have been betting on for some time is that the projects cleared by CCI since mid last year will start to yield benefits in terms of capital goods production or construction or industrial activity more generally. Unfortunately, that has not happened so far. The latest IIP data suggests that in fact it has gone from bad to worse. So the hope is that some of these projects, when they start to come perhaps over the next 1 or 2 quarters, that will start to support activity. But yes, there is no magic wand to bring about an immediate turnaround in the economy, because challenges are several. There is, as I argued earlier, that inflation thing. There is fiscal policy as well, the fiscal tightening and so on and so forth. So both levers of macroeconomic policy at this stage, whether it's fiscal policy or monetary policy, are restrictive of demand. So to sort of hope for an immediate V-shaped turnaround in the economy is unlikely in my view.
And Kapil, what is your view of the CRISIL report that we were discussing earlier in the program? Do you see it as pragmatic or excessively pessimistic?
No, I think I agree with one of the important tailwinds which India faced from 2004 to 2008 period, which is the global economy. That may be missing largely. There might be some revival in the global economy. but to expect the global economy to go back to these old days of 2004 to 2008 is difficult, and to that extent India's growth trajectory going back to 9% is also unlikely in next 4 to 5 years.
So nowhere near the heydays of 9% that we saw. Thanks very much, Kapil, for taking time out and joining in. Maithili, great as always having you with us on the macro discussion. Time to slip into a quick break right here on Market Sense. Do come right back, as on the other side we will be focusing on technical ideas and the equity market.